More pain for Macys, the retailer dropping more than 14% since last week. The chartmaster thinks it may be time to take it back to the store. Carter Worth of Worth Charting joins us now with more on that and broader retail. Carter, you're saying simply sell Macys, huh?
Yeah, I mean, what a mess. I guess we know we have a very bifurcated consumer, right? Things like Urban Outfitter up 43%, AEO, right? Williams-Sonoma up 30. I mean, Abercrombie & Fitch up almost 200 when you've got things like Macys down 40% or Dollar General, Target down 28. So a real winner-loser market. But let's look at three identical charts of Macys earnings coming up this week, along with obviously many retailers. So these are weekly bar charts. We're hovering right at the lows of the past 3 months. So mid-September, mid-October, here we are, mid-November, right at the 1075 plus minus 11. I think we break. So the annotations you see there, that's one of three. Look, it's the second way to draw the lines. You can call it what you want to call it, but it has all the elements of an important reversal from obviously a year ago with perspective further downside. Final way to draw the lines, we've broken down out of these converging trend lines. Now, the COVID low is down at 443, and that's a long way from here, obviously at 1074. But there are many stocks in retail that have already taken out their COVID lows, and there's no reason we can't get a whole lot closer to them in the case of Macys.
Which other stocks, Carter, just before we move on to Walmart, Target, which other stocks have taken out COVID lows in retail?
Well, let's see. Obviously, Dollar General, Foot Locker. Macys is close, but not there yet. I don't know if Target has, but it's real close. So, and certainly beyond retailing, there's a lot of stocks that have taken out their COVID lows.
Let's get to the Walmart and Target then, since we're on that subject.
Sure. Yeah, let's look. These are bigger, obviously more important animals, and let's go right to the charts. So it really depends on where you start your narrative. In terms of the all data, of course, Walmart is about a 6x over Target, going back to 1980. Blue line, orange line. But look at over the past 25 years, actually. They're even money, essentially, with Target slightly ahead, which is to say Target is the high flyer, and this massive give back simply brings it back in line with Walmart. Another way to do this, of course, is to look at a ratio chart. First, though, now look at here is the current spread. And this is a 2-year chart, and that's what catches the fancy. Do you think, wow, maybe there should be some mean reversion, one up 14, the other down 60. But the purest way to do this, again, is to look at one line, a ratio, and that's what this is. This is what you see on the screen is Target divided by Walmart, which depicts a relative strength line. And what that's essentially saying is Target is not the steady one. I'm sorry, Walmart's not the steady one. Target is the high flyer. It's boom bust. And this current bust, though, only takes it back to maybe where it was 8, 10, 12, 20 years ago. It's still in line with Walmart. But finally, let's look at the two charts themselves. And this then gets the issue. Walmart, there's another $3-4 to go, and it will be up against that trend line. I think there's limited upside. I think this stock is loved. And for those who are into fundamentals, price to book, tangible, price to earnings, price to sales, it's all at the highest it's ever been. And then COVID lows for Target, $90.17. There's no reason we can't go visit them.
Okay, so that was my question, Carter. Are we at a place where Target still hasn't really given up the ghost, and that spread, which I do follow that ratio, and I do think we have an extreme, and I think chasm is the word Guy's been educating us on his wordsmithing with a CH. You think we're going to COVID lows, and why not? When you consider that the headwinds they might be facing now are very different than COVID, and they might be more long-lasting.
Right. And so then it depends on who you are in the market, right? A short-term player would play for the break. I think that you get to those COVID lows. And the long-term player looks at that ratio chart and says, we know Target's the boom-bust one. But at this point, if I can sweat it out and take a 1 or 2 year view, I think I can make money in mean reversion in the spread. So both those approaches are valid. It's just knowing who you are and what your time frame is.
When you say for Walmart, for those who own that one, that it has just another $3 or $4 upside and then it sort of tops out, what sort of top is that? Is that going to be the end of its run for now, or how long does that top stay in place?
You're very kind to say that it'll top out because that's a judgment, and we don't know that it will. But my thinking is it can eke out some gains from here. It just feels awfully perfect, awfully loved, awfully unquestioned.